Oh, when we start investing, you start getting into this space, you start hearing all of these terminologies and people using all of these phrases and everything else. And you may sit there and go, I don't really understand what's going on here. How do I do this? How does it work? What's the best way to do it? A lot of people have those questions, especially with the onslaught of people who have started investing in the stock market and in cryptocurrency and in real estate over the last 5 years. And I'm going to talk to you guys today about one of those terms that might be helpful for you if you are a person who's not knee deep into all the terminology, but you want to know the best way to start investing. This video is going to explain it for you. Hi, this is Wrestling with Finance, the YouTube channel for people who have wrestled with finance in the past, but want to do better with it in the future. And before we get into the topic today, I do want to remind you that this being YouTube wants you to invest in like buttons. They really do. So if you feel froggy, go ahead and take your finger, take your mouse, click that like button, turn it blue, turn it black, whatever app you're on, and help the YouTube algorithm let other people who may be like yourself know about this video so it shows up in the recommendations list. I definitely appreciate it. And now, let's get into the video. So for most of this year, I have talked to a lot of people I know about investing, and it's opened my eyes up to some of the confusion a lot of people have as to how to do it. And one of the things I always hear is this: yeah, man, you should just buy it and just hold on to it and then sell it when it goes high. You buy low and you sell high. That's how you do it. But that's not really investing. That's more, you're trying to time the market, and nobody really can do that. I don't know what you're talking about, cash fool. So, okay, you don't want to do that. That's not what you want to do, because there are people who have been doing this for decades and they still can't time the market. In fact, there is nobody who can perfectly time the market. People who get lucky, they have educated guesses, they have educated gambles, they take educated risk, but even they fall short sometimes. And you've seen this from across the board, from the Warren Buffetts all the way down to your uncle who just got his Robinhood app and told you about Dogecoin and told you to buy in at 50 cents and then lost all his money. Those people, no matter who they are, nobody can really time the market. It is absolutely impossible unless you're a psychic and you can see the future, or you're a time traveler and you're from the future, and then you have a sports betting almanac. But outside of that, it's really difficult to time the market. And there is something to buying the dip. Buying the dip is definitely a thing we'll talk about in a different video. But what I wanted to talk to you guys about is one of these phrases that you've probably heard, and it's called dollar cost averaging. What that actually is when you have a certain amount of money that you set aside every single week or every single month or some sort of regular interval like that, where you say take $100 every week and you put it into an investment. It doesn't matter what it is. You have a certain amount of stocks that you have in your portfolio that you want to invest $100 into equally across the board, or if you have an ETF. And ETF like the Vanguard 500, S&P 500 is a very good one. There's multiple ETFs out there. I'll list some on the side here so you guys know some ones to go ahead and research, because again, this is not investment advice. I am not a financial advisor. I am not your financial advisor. You should do your own research and not just do something because you saw some guy on YouTube who told you about it. But I can tell you about what I do. And one of my strategies, and multiple strategies that I use for investing, not trading, not gambling, is I have the VOO and VTI from Vanguard, and I put a certain amount in it every single Friday. Every single Friday, no matter what, I put that money in there. And again, to explain the ETF, and in this particular case, the Vanguard S&P 500 ETF, it basically takes a little piece. You're buying a little piece of all of the stocks that are in the S&P 500, just on a smaller scale, and your $100 goes into it and is spread out among all the stocks that are in that ETF. Yes, that's not exciting. It's not nearly as exciting as being a day trader and opening up your Webull app or whatever it is and sitting there and calculating and trying to time things, and when you get a win, you're all excited, and then you sell it and you're all excited. That's not what we do here. Again, this is an investment YouTube channel, not a stock trader YouTube channel. But as far as you being an investor, as far as having a long-term investment that's going to grow over time, dollar cost averaging into an ETF like the S&P 500, VOO, or VTI, or the total stock market, VTI, you can have a really solid return. People have done charts and figures and studies on this for a long time, and I mean, there are people who've done studies, and they said over a 30-year period, if somebody had accurately predicted the market 100% of the time and bought the dip 100% of the time, compared to somebody who dollar cost average over the same 30-year period, the person who did accurately predict the market 100% of the time did make more than the person who dollar cost average, but it wasn't a significant amount. It was very negligible. So given the fact that most people, again, don't have a DeLorean, we don't have a Doc Brown, we don't have an almanac of the last 50 years of sports betting, considering that, and considering the fact that most of you probably are not psychics, the probably better thing for you to do, especially if you're just starting out, is to dollar cost average. Again, like I said, it's boring, it's not exciting, but for some people, it's probably a good thing, because there are a lot of people who want to get into investing who don't want to look at candlestick charts and do all of these math equations and everything else and figure out all these algorithms. I just want to put my money in there just like you would do your retirement account. And this is a good way to do it by dollar cost averaging. It's essentially the same thing as your retirement account or your 401k or your Roth IRA that comes out of your employer and your paycheck that goes into one of those investing accounts. This is the same idea, except that you're doing it yourself. If you look at some of the returns on some of these, I mean, you're getting higher than the average, the stock market average, as far as returns on some of these, especially if you invest in VOO. I mean, the percentage of return is pretty high. It's been pretty consistent over the years. It's very hard to lose money. Of course, no investment strategy is guaranteed to make you money, but what we're talking about here is something that's more likely to make you money than you sitting around and trying to put $500 into Dogecoin and thinking that it's going to multiply itself 1,000-fold over the next 2 weeks. It also kind of prevents people from having paper hands, and paper hands is another one of those terms where, you know, people, when the market dips, they panic and they sell, and that's probably, if you're an investor in particular, is the worst thing that you can do. You don't panic sell. Being a dollar cost averager and just saying, okay, every single Friday I'm putting $100 in to these ETF funds, and I'm going to do it every Friday. You can even make it automatic. Robinhood, Webull, a lot of these fin apps, they have it where they will say, okay, you can automatically deduct from your banking account and put it into this, buying this particular stock or this particular ETF or this particular fund every single Friday. You can do it and not even have to worry about it, set it and forget it, and not even think about it. Now I'm a little bit more hands-on with my stuff because I got my hands in a lot of different pies for my investments, and I have something like 60 stocks now that I am doing a little bit of dollar cost averaging with them, and I'm also doing a little bit of keeping an eye on buying dips when I see them. So I do keep cash on hand in case there is a big dip. Case in point, there was a big dip in, this isn't stocks, but it's crypto. There was a big dip in BAT token the other week, and I bought the big dip in BAT token, and it paid off for me because when I saw the dip, it went up, and then I'm far up on BAT token when I bought it when it was around 65 cents, and it's trading over $1 right now. But you can do that for anything else. A lot of people did that with Tesla. A lot of people who invested in Tesla and just dollar cost average into Tesla, they're sitting on a lot of money right now. If you've been dollar cost averaging into Tesla over the past couple of years, you're doing pretty damn well. So that is my advice to people who are new into the market and new into investing and hear all these terms and don't know what it means. This is probably one of the ones you want to be more familiar with. Dollar cost averaging, setting up aside a certain amount every single week or every single month to put into a particular investment. And once you've done that, and you've done that for a while, and then you start learning a little bit more about this game, you can move on to other more risky investments, to analyzing stocks if you really want to, analyzing crypto and doing other stuff. But I would suggest this is a good place for you to start if you are new. But I want to know what you guys think out there. Are you a dollar cost averager? Has it benefited you? Has it worked out for you? Or do you think that this is just a ridiculous strategy and the only way you're going to make big bucks is by spending and day trading and doing it and buying a dip and selling high and doing all that stuff? Let me know what your results have been, and let me know what you think, and let your voice be heard in the comment box below. If you want to get started on this, I do have some apps that are available for you. You can get 2 free stocks from Webull down in the description box below by hitting that affiliate link, and you sign up and you will get free stocks. I don't even think there's a minimum deposit anymore. I think they've changed that now. So it's basically getting free money. You might as well check it out and use that link down below. Until next time, I will see you guys here for more of these financial wizardry videos to help explain this very complicated world that doesn't really need to be that complicated to you here on Wrestling with Finance. Have a good day.